Hey there, CA Final students, and welcome to the Explainer. I am absolutely thrilled you're tuning in today. I'm putting on my senior mentor hat for this one, because we are about to completely decode Unit 1, Chapter 2. We're going to walk through the absolute critical laws and the forensic accounting and investigation standards, commonly known as FAIS, that you absolutely need for your exams. I want you to think of this as your financial detective's playbook. Only instead of magnifying glasses and dark alleys, we're using spreadsheets and Section 447. All right, let's jump right in. Here is our game plan for today. We'll cover the legal arsenal, accepting the case, forming the theory, expert help, and finally, securing hard evidence. Starting off with Section 1, the investigator's legal arsenal. Every single financial detective needs a badge, and yours comes directly from 7 specific Indian laws. Grab your notebooks, because you really need to know what these sections target by heart for the exam. First up is the Companies Act 2013, specifically Section 447, which handles fraud in registrations or false statements. Next, we have the SEBI Act 1992, Regulation 11C, empowering you to investigate harmful intermediaries. Then comes the Information Technology Act 2000, Sections 43 and 44, covering unauthorized access, viruses, and system damage. Fourth is the Insurance Act 1938, Section 33, allowing IRDAI to investigate insurers. Fifth, the Prevention of Money Laundering Act, or PMLA 2002, Section 3, focusing on the proceeds of crime. Sixth, and pay really close attention here, is the Income Tax Act 1961. You've got Section 68 for cash credits, 69 for unexplained investments, 69A for unexplained money, and 69C for unexplained expenditure. And rounding out our list is the Indian Penal Code, covering crimes from bribery to forgery under Sections 171B, 405, 417, and 463. Now, you might be wondering, how does this actually show up on the exam? Well, the examiner doesn't just want the name of the law, they want absolute precision. They'll test your knowledge that Section 447 of the Companies Act is what penalizes fraud, or that the IT Act, specifically Sections 43 and 44, is exactly what handles unauthorized access and downloading of files. They are looking for that exactness. Let's lock this down right now. Your memory anchor for this first topic is simple. The 7 laws are the badge of the financial detective. They provide the absolute, unquestionable authority you need to step into a company and start asking the hard questions. Moving on to Section 2, accepting the investigation case. You've got your badge, but now we need the mandate to actually take on a case. This distinction is the core of FAIS 110, which covers the nature of engagement. For the exam, you absolutely must grasp this difference. Forensic accounting is specifically about gathering evidence for presenting before a competent authority, like a court. An investigation, on the other hand, is generally about uncovering fraud without that specific court-bound purpose. Knowing exactly which one you're doing changes your entire strategy. Once you know the nature of the engagement, you move straight to FAIS 210 and 220, which cover engagement objectives and acceptance. This is your strict due diligence phase. You must ascertain risk parameters and evaluate the risks of even taking the job in the first place. You also have to identify all direct and indirect stakeholders. Most importantly, you need to ensure a crystal clear scope and outcomes. And if that scope changes midway, it must be documented in writing. The crucial takeaway here is this one-line memory anchor. No official engagement letter, no investigation. Period. FAIS 220 absolutely demands that you obtain an official engagement acceptance and appointment letter before you even lift a finger. It protects you and it formally activates your mandate. Let's move to Section 3, forming the fraud theory. We have our legal badge, we have our official mandate, so let's get into the actual detective work. It's the ultimate question, right? What exactly makes an employee decide to cross that line? To answer this, we look to FAIS 120, which focuses on fraud risk. This standard helps professionals identify those vulnerable areas and spot red flag indicators right from the jump. Under FAIS 120, you must understand the core concepts of the fraud triangle. For a fraud to actually happen, 3 elements must coexist: opportunity, incentive, and rationalization. You use this to prioritize your preliminary risk assessment and assign work by skill. Then, you pull in FAIS 130, which requires you to apply the correct laws to the situation. You need to classify them properly into direct impact laws like the Evidence Act or PMLA, and engagement-specific laws like the Insolvency and Bankruptcy Code, the Prevention of Corruption Act, or the Sarbanes-Oxley Act. So how does all this translate to exam day? The examiner will test if you can match the FAIS code to its exact objective. They might ask, which FAIS standard identifies fraud risks? Boom, you know it's FAIS 120. What does FAIS 130 ensure? Legal knowledge. They might ask what the focus of FAIS 140 is, and the answer is hypothesis formation. It's really not just about reading the standards, it's about associating that standard number with its core function instantly in your mind. Speaking of FAIS 140, let's break down hypothesis mapping. A hypothesis gives direction to your whole engagement. After understanding the background, you map out 6 key things: what happened, who was involved, why the allegations might be true, how the fraud occurred, when it took place, and what concealment measures were actually used. Once you have this map, it feeds directly into FAIS 310. FAIS 310 guides you in planning a specific dynamic assignment with the right resources allocated, and the depth of that plan depends entirely on whether you're dealing with financial statement fraud, corruption, or asset misappropriation. Lock this into your brain for FAIS 140. The hypothesis is the detective's map. You simply cannot conduct a methodological, effective investigation without it. Without it, you're literally just wandering blindly through piles of spreadsheets. And let's not forget our memory anchor for FAIS 120's fraud risk. Just like a fire needs heat, fuel, and oxygen to burn, a fraud needs opportunity, incentive, and rationalization. If you see those 3 coming together during an engagement, you know for sure there is smoke. All right, Section 4, engaging outside expert help. Because let's face it, sometimes a case gets incredibly complex. You might hit a wall with highly technical data or complex valuations like legal advice or trade analysis. That's when you call for backup. FAIS 230 covers using the work of an expert. You must evaluate their qualifications and check for conflicts of interest. FAIS 240 deals with engaging with agencies. Now pay close attention to this part. Even if an agency is controlling the evidence gathering, any limitations placed on you must be fully disclosed in your final report as per FAIS 510. You cannot hide behind an agency's restrictions. Throughout all of this, FAIS 250 is your rulebook for how you communicate with stakeholders. You have to maintain a dynamic list and ensure clear, continuous, two-way, and highly confidential communication. But here is the critical exam detail. What do you do if you discover that the primary stakeholder, say the CEO who actually hired you, is the one involved in the fraud? FAIS 250 explicitly states you must redirect your communication, perhaps going straight to the board of directors or the audit committee. Here is your punchy summary for FAIS 230 and working with experts. You can outsource the work, but never the responsibility. The forensic accountant always retains ultimate responsibility for the final findings. Finally, Section 5, securing the hard evidence. We're in the home stretch now. We've investigated, brought in experts, and built our hypothesis. Now we move to locking down the proof under FAIS 320, evidence and documentation. This isn't just about filing papers. It's a rigorous process of sealing and preserving every single piece of original evidence until all legal proceedings have entirely concluded. Furthermore, under this standard, if you face any non-cooperation by stakeholders during evidence gathering, you are legally required to document and report it. This matrix is an absolute lifesaver for FAIS 320. Examiners absolutely love testing this. You have 3 systems. System 1, distinguishing primary original documents from secondary certified copies. System 2, oral and documentary evidence versus electronic evidence. And System 3, technical evidence from mechanical devices versus camera evidence like photographs. Keep this matrix firmly in mind, and you'll nail any question on evidence classification. Let's wrap things up with this thought. Evidence is the chain of custody for a smoking gun. You now have the playbook. You know the 7 laws that give you power. You know how to accept an engagement under FAIS 110, 210, and 220. You know how to build a hypothesis under 140. And you know exactly how to lock down the evidence under 320. CA Final students, you have everything you need to completely crush this chapter. So the only question left is, if you missed a crucial step in this playbook, would a real-world fraudster walk free on a technicality? Keep studying hard, and I will see you in the next explainer.